We have some breaking news surrounding Warren Buffett's Berkshire Hathaway on a stock that they bought 5 different times in the last week. Now, this is a really rare occurrence because typically we only get to see the moves that Warren Buffett makes in his portfolio 4 times a year, and that's when he's required by law to release his Form 13F. Now, from this document, we can get a lot of helpful insights, as well as get new investment ideas. But one of the things we do have to keep in mind is when we get access to this information, it could be over 3 months since Warren Buffett has made these moves. But what happened over the past week with Warren Buffett is a very rare occurrence. We can actually see the stock he bought. Now, the reason we can see the stock he bought is because he already owns 10% of this company. And so in this case, he is required to reveal this move. So in the last week, Warren Buffett has been adding shares of OXY to his portfolio in prices ranging from around $45 to $46 per share. Now, this is really interesting because actually if we look at Warren Buffett's buying history, before this move, he had an average buy price of OXY of about $54.20 per share. And if we look at how OXY has been trading over the past year, it's down around 21%. And over the past month or so, it's actually been below $50 per share. So we've had the rare opportunity to buy this stock at a much lower price than Warren Buffett's been adding it to his portfolio. And if we take a close look at these transactions, we can see he added shares on December 17th, twice on the 18th, and twice on December 19th. And again, it looks like his purchase price was around $45 to the upper $46 per share mark. And this is a stock Buffett has been adding to his portfolio on multiple occasions since 2022. And before he made this recent move, we have to keep in mind, this was a position that was almost 5% of his entire portfolio already. Now, as news has come out about Warren Buffett's purchase of this stock in the last week, we can see in the past 5 days, the stock has started to jump up a little bit. As news came out, it was trading at about $45.30 per share and got as high as about $47.90 per share. So yes, there was a jump up, but it wasn't dramatic, and the stock is still trading below Warren Buffett's average buy price of around $54 per share, which will be a little bit lower once we account for the new purchases. So is this an opportunity to buy this oil stock? Well, there's a couple of different things we have to address, and definitely some points that you have to understand about Occidental Petroleum in particular. First off, if we jump over to my dividend breakdown sheet, let's come over here and plug in OXY and hit enter. And there's some quick takeaways we can see from this dividend breakdown sheet. Now, like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Now, we can see Oxy is a stock that is currently yielding about 1.87%. But that hasn't always been the case for the stock. In fact, if we jump over to Seeking Alpha and look at the dividend yield history for this company, let's zoom out and look at the last 10 years. For the majority of the past decade, the company had a starting dividend yield ranging from around 3.5 to about 4.5 or even 5%. And then COVID hit, and for a short period of time, it looks like their starting dividend yield was very high, but in reality, they ended up slicing that dividend payment, which we can see on my dividend breakdown sheet. It went from about $3.14 per share to in 2020, they only paid out about 82 cents, and 2021, nearly nothing. So they're still trying to recover that dividend to what it was pre-2020. Now, when we talk about these oil stocks, I mention this quite often, but they're very cyclical. Let me show you what I mean. So if we jump over to my stock screener, let's come up here and look at OXY. This data will load in, and if we come over here and look at earnings, look at the way it's fluctuated over the past decade. It goes up and down, up and down. So how do we explain what's going on here? Well, if we jump over to the company's investor presentation, we can look at what's called cash flow sensitivities, essentially a sensitivity analysis to the cash flows of the company. And here's what they're comparing the sensitivity to. We're looking at the cash flows and its sensitivity to oil prices. So for example, if we look right here, the key point, annualized cash flow changes around $260 million per a $1 per barrel change in oil prices. So the cash flow this company generates is heavily correlated to the changes in oil prices. And if we look at historical oil prices, they're very, very volatile. We're currently looking at oil prices since around 2000, and obviously we see a lot of volatility. But let's zoom in and take a closer look since around 2010. Look at this example. Look what happens in 2020. Oil prices get the lowest they've been in around a decade. And if we jump over to the dividend breakdown sheet, look at free cash flow in 2020 for this company. It got as low as around $788 million. And then if we look at what happened just around a year later, 2021, oil starts to recover. And so if we look at free cash flow in 2021 for this company, it gets all the way up to about $7.5 billion. And if we start to look the year after that, 2022, it goes even higher. And if we look at the free cash flow, the same thing happened for Oxy. So when we talk about these oil stocks being very cyclical, this is why they're extremely sensitive to oil and gas. So what can we expect from oil and gas prices moving forward in 2025? Well, earlier this month, OPEC actually cut the forecast of oil demand growth for the end of 2024 and 2025. And if we scroll down and look closer, we can see prices have slumped around 17% since early July amid weak demand from China and growing supplies in the Americas. And so based off this news, it's kind of evident why we started to see the sell-off in Oxy not only in the past year, but in the past 6 months alone, down around 24.5%. And one of the things I also want to make note of when looking at this stock is look at the short interest. It's about 3.4%, which if we compare that to some of the other oil stocks, we can see Oxy is one of the highest shorted energy stocks in the S&P 500. Look right here, they're actually the third most shorted energy stock. And so that obviously doesn't help with investor sentiment. Now, what we did see on the dividend breakdown sheet is free cash flow has done pretty well for the past 3 years, but what's been going on over the past 3 quarters for this company? They don't yet have full 2024 data. We're waiting on Q4 data. And in fact, if we jump over to the earnings tab on Seeking Alpha, we can see their next announcement date is going to be on February 20th. And we can actually see most of the earnings per share revisions over the last 90 days have been bearish. But if we jump over to my free cash flow sheet, let's come up here and plug in OXY. If we come down here, let's change this from free cash flow per share to just straight up free cash flow. Here's what we can see. In 2021, free cash flow was actually very steady, probably the most steady it's been in quite some time. We saw the spike up in 2022. In 2023, it's been a little bit lower, but over the past 3 quarters, we've seen the lowest free cash flow since the beginning of 2021. Q1 2024 free cash flow came in at about $275 million. If we look at Q2, again, it was relatively low compared to the past 3 years at $623. And then the most recent quarter was solid, but obviously for the year, we're going to be seeing much lower levels of free cash flow for 2024. Now, the last thing that I do want to address with this company is, again, it's going to be the dividend. And like we saw, historically speaking, the company has paid a pretty attractive dividend. And this is actually something they talked about in the investors presentation. If we look a little bit closer, we can see shareholder return priorities. And this is so important to understand whenever you're buying a stock because it's going to tell you how they're going to reward you as a shareholder. And we can actually see the main priority for this business is to pay out a sustainable and growing dividend payment. And again, if we jump over to that dividend breakdown sheet, yes, the starting dividend yield is on the lower side at about 1.87%, but I do think this company is trying to make moves to aggressively bring it back at a high rate to get it back to where it was pre-2020. Now, I do want to quickly mention from a valuation perspective, these companies can be extremely difficult to value because there's so much volatility and sensitivity to oil prices. So it's no doubt interesting that Warren Buffett has been adding shares of this to his personal portfolio over the past few days. But as for me, I prefer to make my investing process very simple. I want to buy companies that have very predictable and growing free cash flow and as a result pay out growing dividend payments. But go ahead and let me know what you think of this company in the comments down below and what you think of Warren Buffett's most recent moves in purchasing this stock over the past week. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.